All right, all right. Welcome to the channel. Welcome to yet another episode of my trading journey. So this portion of the journey, I like to uncover how to trade options on Thinkorswim. The actual technique I'd like to uncover is called the poor man's cover call. Here I'll give a brief explanation of how the poor man's cover call breaks down. But before I do so, do understand something. I am not a financial advisor. Do your own due diligence before investing in the stock market or anything for that matter. Just moving along. So what a poor man's cover call actually is basically you're buying contracts of an equity or ETF out in time, say maybe 3 months, 6 months. You can go out a little farther than that, but then you'll turn around and you'll sell a contract, same equity, but closer in time. So for example, you could buy 3 contracts of, I'm making this up, of fictitious stock, say stock X, and the expiration is say 3 months out, say like September or something like that. You find a strike price and what have you. Now, after those are bought, you go in time. Now, you'll sell the contracts that are closer to time. Now mind you bought 3 contracts with one out until September, and you sell one. You'll sell 3. That expires next week. Hope that didn't confuse you. However, I'm actually in a trade as such, and the ticker is TSLL, which is an ETF. So let me log on to Thinkorswim, and you can actually see my trade, and hopefully that gives you a better idea than how I was trying to explain it. Let's go. I've been to Thinkorswim, and I'm on the ticker TSLL, and the option chain is pulled up. So you can see where it says January 27. That green flag, that's the one that I actually purchased. So I'm gonna pull that up real quick. And I bought 3 of those. That's the $10.70 strike. You see 10.7, you see the flag by it. Now, it's decreased in value since I bought it though. I bought 3 of them for $9.35. Now you see the top portion of the chain, 23rd of May. I sold 3 contracts for that week, and they expire in 2 days. Now, you see the green flag, that's before we go into the green one, you see the red one. The red flag represents the contracts that I sold. Now, I sold those contracts against the other one that I bought 3 contracts for, January 2027. Now, this is a very inexpensive way to sell contracts without actually owning the shares. So I'm going to pull that chain up real quick. Now, as you see, this is the strike price that I sold, the $17 strike price, and both of the flags are on the 17. So I sold 3 $17 contracts, and they're secured by the $10.70 contracts that I bought. We're gonna put it all in perspective. Now here you see that I'm down, like I previously told you. The contracts, I bought them for $9.36 per. And I sold 3, that's going to expire in 2 days. And I received $20 of credit for each contract, so that's $60. Now the contracts that I sold are now only worth 4 cents. Now you see up top where the numbers are fluctuating, that's a representation that the market is actually still open. So I'm able to do this in real time. Maybe I can close this out and get back into another one. Let's do this real quick. I'm going to hit the close button. Then I'll hit the review button. And as you see, it got filled. Now I get to do it again. So if you found value in the content, please like, share, and subscribe. And by the way, if you're interested in starting your investing journey, there's 3 links in the description. One for Webull, one for Robinhood, one for Moomoo. Any one of those you can get free stocks from, and free stocks is free money. Let's get this money. Let's go back to the video. Now the way this works, you see this option chain for TSLL. I can pick any one of these weeks and sell and keep selling 3 contracts against the 3 contracts that I bought. So let's try the 30th of May. Now in fact, before I even sell those contracts, since I'm down on the original contract, I'm gonna buy 2 more. Let's see if I could buy 2 more before I start selling any more contracts. Then I'll hit send, and I just got filled. So now as you see, my dollar cost average went down some. It represented $9.35. Now, because I bought 2 more, it took it down to $9.13. So now I can sell 5 contracts to the market. We're going to get into this. We're going to use the 30th of May. Now the option chain for the 30th of May is popped up. Now we're going to find a strike price that we could sell these contracts against. So here we are, and currently I'm looking at the $17 strike price. Now in case you're asking why did I pick that one, is because when you look at the delta, you see where it says 1.820. I'm going to use the whole number, 18 minus 100 from that. That gives me an 82% chance of probability that this will be successful. That said, I'm gonna sell that contract, and the way you sell that is you hit the bid side where you see where it's red and it says 22. You hit that. This will be the next screen that comes up, and you see where it says sell. Now the national is 22, the mid is 24. So what I'm gonna do is I'm going to try to get a little bit more premium for it. You see where it says limit, the plus sign, I increased it by 1, so it's somewhere in the middle. Matter of fact, maybe I should go for the mid. So as you see, because the market is still open, the price is fluctuating some. So I'm going to try to get 25 for it. I'm going to hit review. Alright, I had some technical difficulties going on, but I did manage to sell all 5 of the contracts at $23 per contract. As you see right there where it says 23 as a trade price, and you see that I'm selling 5 contracts. You see that red number 5 and the red flag next to it, and you can also see that the market is actually open at this time. So with that said, what this means is if TSLL goes to $17 next week, I will then profit the difference between $10.70 and $17. I'll pull up the math for you. Now, breaking down the math. So if TSLL goes to $70, now that would minus what my strike price is $10.70. The difference there is 6.3 or $6.30, but that's times 100. So that's $630 per contract. And that's times 5 contracts. 3,150. Worst case scenario, TSLL does not reach $17. I get to keep 23 times 5. The 23 represents the premium, the 5 represents the contracts. That's $115 that I get to keep just for pressing a few buttons. You gotta love it. And not to mention, if it doesn't reach $17, I get to do it yet again with 5 more contracts and whatever week I feel like. And that's how you would execute a poor man's covered call. So what did you think? Was the info helpful? If you found value in the content, please like, share, subscribe. Feel free to let me know what you thought in the comment section. Lastly, I'd like to take a second to thank all of you who watched the video. Thank you for sharing your time with me. And if you want to see more content, click up there. Until next video, love you all. Happy trading, be well, and peace.